Today, I want to share a new multi-time frame analysis. So I will be taking a pair, analyzing it from a technical perspective, fundamental perspective, and by using these two different views, I will be sharing how we can be looking for a potential capitalizing opportunity on it, and most importantly, how you can be using the same concepts in your own trading plan and trading strategy. Now, if you're new to the channel, I'm a top author on the TradingView platform, and I share free education and analysis on all my platforms daily. So I suggest you subscribe, and I will see you in the video. Okay, so the reason for which I want to make this analysis on Euro USD is because the pair is very interesting to be followed at the moment, and because the analysis will be very educational, because there are some very key aspects that I want to speak about and I want to teach you about. So I really suggest you stick with the video until the end, because you will definitely learn a couple of important concepts. So let's start our analysis from a technical perspective. Then I want to show you a very interesting thing about the COT data, and then I will show you how we can be looking to capitalize on Euro USD. So let's start our analysis from a weekly perspective. Now, on the weekly time frame, what we can see? We can see that the market, after creating a strong move to the downside, tried to go up, tried to continue to the downside, but failed and created a huge impulse to the upside. Now, when you have a movement like this, down, up, tries to go lower, but then breaks everything to the upside, this is called an overextended W formation. And after a movement like this, you want to see the market make a retracement at least to the 0.382 Fibonacci retracement taken on the impulse. So from the low to the high of the impulse. So let's do this in this actual market, live market situation. Let's take our Fibonacci from the low to the high of the impulse. And let's identify our first target to the downside, the 0.382, which is here. Now, here is the first interesting thing that we can clearly see on Euro USD. We can see that if we extend this structure level to the left, what we can see that we have very important previous weekly resistance now turned support here. So what does this mean? It means that the 0.382 Fibonacci is lining up perfectly with weekly previous resistance now turned support. And at the same time, if you look at the other Fibonacci levels, we also have the 0.618, so the golden ratio, lining up perfectly with this previous resistance, which is now turned support, meaning that the Fibonacci levels have lined up, more than one Fibonacci level has lined up with structure if we take our Fibonacci from the low to the high of this impulse. Now, when this happens, what will happen most of the times is that the market actually does start the retracement from that level, because most of the times the Fibonacci levels must align with the structure. So this is the first thing that I want to speak about. From here, we have good probabilities of the market starting the retracement to the downside, because we have our downside target, so the 0.382, lining up with this structure. We have the overextended W formation, and we want to see the retracement. Perfect. Now that we have these informations, let's go down on the daily and see what kind of situation we have from a daily point of view. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now, on the daily time frame, clearly we see that the market has created a strong impulse to the upside, and after an impulse, what do you want to see? You want to see the market make a retracement, right? A retracement to the level that we have already identified from a weekly perspective. So the 0.382 that is lining up with the structure. But at the same time, you also realize that, wait a second, the market had already started a retracement to the downside. Why hasn't the market just continued to our downside target, and why haven't we entered the market? And to answer this question, there are actually two answers that I have to give you. The first one is, if you look at the market from a 4-hour point of view, So the time frame for entry, because always remember, monthly, weekly, and daily are the best time frames for direction. But when it comes to entry, the best time frame is the 4 hours, because it gives you the possibility to find the best risk to reward opportunities in the market. And what we can see that the market remained bullish all the time. The market just continued to create higher highs and higher lows without showing any sign of weakness. Therefore, impossible to be looking for a short opportunity. So definitely, we couldn't expect the continuation to the downside yet. And the second answer that I have to give to the question, why didn't the market just start to move to the downside, implies COT data. In fact, if we go and see what hedge funds were doing on Euro, what hedge funds are doing on Euro USD, what we can see now. If you don't know what this is the commitment of traders. So hedge funds and the biggest speculators in the market, so basically the non-commercials, they are forced to report their positioning, and they are right most of the times. So if you're able to follow their orders, then you definitely have an advantage over your competitors in the market. And if we go and see the data for the euro, which always keep in mind, if you check the data for the euro, you're actually checking Euro USD, because all currencies on the spot are traded against the USD. What you can see that from a non-commercial perspective, so a hedge fund point of view, they had in the past way more shorts than longs. In fact, they had 271k shorts and 157k longs, so way more shorts than longs. And now they have the completely opposite. They have way more longs than shorts. In fact, they have 174k longs and 93k shorts, which is perfect because it reflects the price action, right? They added a lot of longs, closed their shorts, and Euro USD made the move to the upside. They're right most of the times because they have all the money, so they control the market. But if you look at their recent positioning, okay, if the market wants to make a retracement, but hedge funds haven't added any shorts yet, and most importantly, haven't closed enough longs, because you don't necessarily need them to open shorts to start a retracement. If they start closing a lot of longs, so thousands of longs, that is enough for the market to start a retracement. Because if you close a long position, what you're actually doing is selling. So if you start closing thousands of longs, you're actually selling. So we can definitely expect a retracement. But at the moment, we haven't seen neither proper shorting, okay, nor any kind of proper long closing. Only minor longs closed and a lot of shorts closed. So definitely the market is not ready to make the move to the downside. And the reason for which they haven't started adding shorts or closed their longs is because they always have to hunt stop losses in order to generate the liquidity to actually trade. Because for every buyer there has to be a seller, for every seller there has to be a buyer. But they have almost all the money, so they need to generate those buyers and those sellers. And how they do it? They manipulate the market. So for example, bringing price higher, many people will start to buy and they can use their orders to sell, or if they want to close their buy positions anyway, they have to sell and somebody needs to buy. So how we will be approaching this delicate situation with students? We have to first of all wait for the manipulations to be over and anyway be reactive and not predictive in the market, because remember, everything can always change. That is why I say many times, and I continue to say, you have to be reactive, not predictive, and you need to have a clear strategy in place. So we will never be shorting until all 100% of our rules will be satisfied for the move to the downside. The first one will be to see from a 4-hour perspective a clear shift from a bullish market to a bearish market, because at the moment everything is still bullish. So the market can just continue to the upside from here and we will just let the market go, because there are way better pairs to follow, because they have better probabilities and are satisfying all our rules. But at the moment there are two possible scenarios for Euro USD. Now, if Euro USD before breaking above this structure, so before breaking above this high, will shift from a 4-hour perspective, from a bullish market to a bearish market, then with students, we will be waiting for one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short, their target will be the downside target that we have identified already from a weekly point of view. And this will be a very high probability trade to the downside with a good risk to reward. We will see hedge funds add shorts or close a lot of longs, and it will be a nice ride to the downside. On the other side, if everything will remain bullish as it is right now, then the market will manage to break above this high. And if the market breaks above this high, this is an important concept that I want to explain again, but I explained already a lot of times. If the market actually does manage to break above this high because everything remains bullish, then this previous resistance will be turned support here from a daily point of view. And never, ever, ever try to short at a daily support. So if the market manages to break above this level, don't look for any shorts until the market will break back below this level, okay? Back below the level, because at that point, again, this level will be turned resistance. We will have the possibility to create a nice head and shoulders formation on the retracement. And at that point, that is when you will have the best probabilities, and that is when we will be monitoring, again, price action inside of this area, waiting for the market to provide to us one of our valid entries to take a nice short position with a very good risk to reward and good probabilities again for the move to the downside, because the risk to reward, if you look for a short above, is very good, but you don't have good probabilities because you are shorting at a daily support. Okay, so the market can just easily reject the area and continue higher. That is why always be reactive, not predictive, and have a clear rules-based strategy that you are following. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. The link is in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So it's a very complete program. I suggest you go and check it out. The link is in the description, and I will see you in.